This is Shireesha from Master of Business Administration, Institute of Aeronautical Engineering. In this session, I'm going to discuss about what is journal book, and how do we transact the entries in the journal book, where we call it as general entries. So, we are going to discuss about how we are going to put all the transactions in the form of journal entries. So let's move on with the what is called journal and journal book. So journal book is a day-to-day activities what are all going on in the business are to be recorded in the book, which we call it as journal book, and all these transactions are going to be posted in the journal book, which we call it as a journal entry. So basically we have two stages in the entry system where all the transactions are recorded in two stages. First stage is journal and the second stage is ledger. So first of all, a business transaction is incurred, and that transaction has to be recorded in the books of accounts. So and so has happened in the business. So that transaction is going to be posted, or it is going to be entered in the journal book first, where each and every transaction, whatever is happening in the daily life of the business, is going to be entered in the journal book, which is the very first book of account, where we call it as a journal book. So that's the reason we also call it as day-to-day or daily book. So first, the entries are made in the journal book, and those entries are again posted in ledger accounts, where we are going to know what is the accurate amount of cash which we have in our hand, or how much of creditors are pending, how much of debtors we have, what are the total sales we have made, what are the total purchases we have made in the business, can be known by just making this ledger accounts. So let's move on with the journal book. So here there is a flow of accounting information. So here we are going to take first, what are we going to record in the books of accounts? First of all, some business transaction has to be incurred in the business. So once that business transaction is incurred, then we are going to create a platform, or we are going to do a bookkeeping, where we are going to write that so and so transaction has happened. For example, I have sold goods to some X person. When I have sold goods to some X person, this is the transaction which is happening in the business. So that is the first stage. And then this happened transaction has to be recorded in the books of accounts, which we call it as bookkeeping. So that has to be documented properly, and in the business document has to be prepared. This is the second stage of the transaction, where we call it as a transaction here. And the third stage is we are going to put this bookkeeping or put this transaction into the form of entry, where we are going to differentiate what is debit and what is credit. So here we are going to enter the record in the journal book, where it is the third stage. And then this entered transaction or entered entry, we are going to post it in the ledger accounts. And through ledger accounts, we prepare a trial balance. So this is how the flow of accounting goes on with. So now let's move on with how the journal entry formats will be. So format of journal entry, we have 5 columns, that is date, particulars, LF, which is called as ledger folio, debit amount, and credit amount. We have 5 columns, and in the first column, which is date, is here we are going to write on which date this transaction has taken place. For example, on 1st October 2021, the transaction has taken place. We are going to write it like this, 1st October 2021. And here we are going to write what is going to be debited. We have to write it on the first row. The account to be debited has to be written. For example, here cash has to be debited, for example. So if cash has to be debited, so cash account debtor, we call it in form, we write it as DR. In short, we call it as cash account debtor to, for example, Pasha account. So this Pasha account is credited. Okay. So here we are going to write the debit amount, debit account, and here we are going to write the credit account. And this line which is indicating account debtor, will tell us this cash item is debited. And this too indicates that here we are writing this Pasha account on the credit side. So this is how the entry in the journal book has to go on. And coming to ledger folio. So what is this ledger folio? Ledger folio means here whatever this cash account or Pasha account, here we are going to make individual cash account, we are going to make individual Pasha account in ledger accounts. So when we make a cash account, here what is the page number where we are going to post it here. Okay, so that page number we are going to write it here. For example, this cash account is prepared in 15th page. That we have to write it here. If Pasha account is created in 16th page in that accounting book, then it is 16. And what is the amount for which the transaction has taken place? For example, 500. 500 we'll write it in the debit column. 500 we'll write it on the credit column too. Because as we discussed, we'll have twofold effect. That is, for every aspect, for every transaction, we'll have twofold effect. One is debit, the other one is credit. So that is dual aspect concept according to the concepts of accountancy. So here, this amount has to be written exactly adjacent to the debit entry, and credit also you can find this. So exactly this is matching the place. Okay, one should not write the credit amount here. Okay, so this is how we are going to write the entries in the journal book. So this is the format of journal book or journal entries. So now let's start with a particular problem, and then we discuss each and every aspect and post and make entries of journal. So now let's take a problem here. Here the problem is journalize the following transactions. So on 1st April 2021, Asha has started business with cash, some amount of cash, that is 1 lakh. So here, first of all, we need to identify a few transactions. These are all transactions. We call them as transactions. And all these transactions has to be recorded in journal entries. So these transactions are going to be recorded as a form of entry. Entry means here each transaction we are differentiating with one debit aspect and the other credit aspect. And here first transaction is Asha started business with rupees 1 lakh. And the second one is April 2nd purchased furniture for cash 7,000. On April 8th, purchased goods for cash 2,000. On April 9th, purchased goods on credit rupees 1,000 from Khalid retail store. So like this, we have got so many transactions in our hand, and all these transactions are to be entered in the journal book. Now, one by one, let us split these transactions into two, and let us make the entry now. So now coming to the first two entries. On April 1st, 2021, Asha started business with rupees 1 lakh. Asha started business with rupees 1 lakh. So what we need to do here is, first we need to identify the three rules of accounts. What are the three rules of accounts? Real account, nominal account, and personal account. So these are the three rules of accounts. So what is a real account rule? Debit what comes in, credit what goes out. And in real account, we are going to we are going to consider all the types of assets. All the types of assets. In nominal account, we are going to have what are all the recurring expenses or the regular expenses and the regular losses and incomes we are going to record in the nominal account. That is, the rule of nominal account is debit all expenses and losses and credit all incomes and gains. And coming to the personal account, here we are going to identify some person name or institution name or any organization name we are going to consider, and those names are identified as personal account items. And the rule for personal account is debit the receiver, credit the giver. So now let us identify each and every transaction with the help of these three rules of accounts. So first of all, on April 1st, 2021, Asha started business with 1 lakh. So this is the transaction which we have. And always we should remember the first rule to enter into the journal. We should feel that this transaction has incurred by us and this business is ours. So that the entry is going to be very easy for us to do. So that's the reason. First of all, who is this Asha? We'll assume it as ourselves as Asha. Okay, our business as we are the business here. So who is this Asha? Asha is owner of the business here. Asha is owner of the business because owner will only start the business, right? So owner started business with what? With some amount of cash. Some amount of cash, that is 1 lakh rupees. Okay. So now Asha comes under which account? Asha comes under which account? Asha is name, that is one person. So it comes under personal account item. So I'll write it as P. And coming to cash, cash comes under real account. In the previous session, we have discussed when we discussed all the rules of accounts. So cash comes under a real account. So I'll just mark it as R. So according to the rule of real account, what is the rule of real account? Debit what comes in, credit what goes out. So this cash is coming in or going out. So cash is coming into the business. Cash is coming into the business. Always we should remember that here we are writing the business accounts. We are writing the business journal entries. So here in the point of view of business only, we have to record each and every entry. So here for business, cash is coming into the business. Asha is owner. Owner is getting this 1 lakh rupees cash into the business. So cash is coming in. So as per real account, debit what comes in. So this has to be debited. And this owner has to be, what we need to do, this owner. Here Asha is a personal account item. So according to personal account, debit the receiver, credit the giver. So here we have to debit the receiver. Asha is a receiver or giver. Asha is giver to the business. Asha is giver to the business. So we have to credit Asha. But as per the regulations of accountancy, we should never write owner's name in the books of account. We should never write owner's name in the books of accounts. So instead of Asha or instead of owner, in what form this Asha is getting this 1 lakh rupees? Let us think about it. In the form of capital, this Asha is getting this 1 lakh rupees. So instead of Asha or instead of writing it as owner, what we will write it as? Capital account. So now ultimately this capital account has to be credited. So cash account has to be debited. So this is what we understood by applying these 3 rules of accounts, or only 2 rules of accounts for this particular transaction, which is a real account and personal account. And now coming to the second transaction, that is on April 2nd, purchase furniture for cash. Purchase furniture for cash. So what are the important items which are going to fall under these 3 accounts? So furniture and cash are the 2 important items for us now. So coming to this furniture comes under which account? Is it a regular expenditure? Are we going to buy furniture for the business every day, every month, every week? No, we will not do that, right? So furniture we are going to purchase only for very rarely. This is not a regular expenditure, and this furniture is a asset. So it comes under a real account. Furniture comes under real account. As we know, again cash comes under a real account. So let us apply the real account rule. Debit what comes in, credit what goes out. Here purchased furniture. Purchased. What are we doing? We are purchasing. That means purchased furniture means furniture is coming in. So we have to debit. And cash. Once we purchase furniture, furniture is coming into the business and cash is going out of the business. So as per the rule of real account, it has to be credited. So purchase furniture. Furniture is coming in and cash is going out. So debit what comes in, credit what goes out. So balanced. So here furniture we have to debit and cash we have to credit. So now let us put all these debit and credit items in the form of entry. So in the journal book. So on 1st April, what is the transaction? Asha started business with rupees 1 lakh. So what did we discuss here? Cash we have to debit. So that's the reason we wrote cash account debtor to capital account. Capital account we have to credit. So we are writing to capital account. How much is the amount? 1 lakh. So we wrote 1 lakh here. This is 1 lakh, and exactly in the credit column we have to write 1 lakh. And coming to this part, that is being Asha started business with capital. What is this? This is called as narration. For every entry, we have to write the narration where it is giving the a small description of the entry, whatever we have written here. Here, by just seeing this entry, we'll get to know what what, like who has started a business? We don't know that. We don't know what is the name of the particular owner. So by seeing this narration, we'll understand this Asha has started business with some amount of capital, right? So this is a small description for the entry, whatever is recorded or whatever is written here. So this is the entry. This is the journal entry. This is a journal entry and this is the narration. Here we have to write the date. Here we have to write the date and to which account, in which page in the ledger account we are going to post, that also we have to write it here. But now we are not going to deal with ledger account, so I'm not writing anything in the ledger folio column, and we are going to write the debit amount as well as the credit amount. And now coming to the next transaction, that is purchase furniture for cash. Purchased furniture for cash. Here already, as we discussed, furniture we have to debit and cash we have to credit. So furniture account debtor to cash account is the entry. And now we have to write the small description about the entry, that is being purchased furniture for cash. So in the debit amount and credit amount, we have to write the amount. So with this, we did the entries for 2 transactions. We are done with 2 transactions now. Now let's move on with the next 2 transactions. So here, coming to the next 2 transactions, on April 8th, purchased goods for cash rupees 2000. Purchased goods for cash rupees 2000. So first what we need to do, we need to identify what are the 2 important items in the transaction. Here, purchased goods. Goods means it is goods in the sense it can be some raw material, it can be some material, whatever requirements for producing something like that. Okay. So we name it as a goods. Okay. So now purchased goods for cash. So in this transaction, again, we can identify 2 important items, that is goods and cash. So when business is purchasing goods, what is happening? Goods is coming in. Goods is coming in. So goods comes under which account? Real account. Cash also comes under real account. So as per real account item, as per the rule of real account, debit what comes in, credit what goes out. So debit goods, because goods are coming into the business, and for whatever we have purchased, we have to pay some amount of cash, so we have to credit that. We have to credit cash. So the entry can be goods account debtor to cash account in the journal, but we are not going to write it as goods account. We have to write it as purchases account. We have to write it as purchases account debtor to cash account in the journal book. Why we need to write as purchases account? Because all the time, whatever goods we are buying, see, here we will not know what is the net amount of goods which are there in the accounting, in the physical form of the goods in the organization or in the business. So why will here if we are writing goods, we will be a bit confused, because here goods are coming in, and I'll write another transaction, goods returned to Raju, rupees 1000. Here, whatever I have purchased goods for cash, that is for 2000, I am returning 1000 worth of goods to Raju. That means I did not feel that 1000 worth of goods are required for me at that moment. So I am returning to Raju. So I'll not know here again. I will not know here again. What will I write? For example, goods. Here what will happen is Raju account debtor to goods account. I should write it as the journal entry. But what happens is, if I write Raju account data to goods account, here it will be a great confusion here. What is this? Is it a sales or is it a purchase returns? So for example, if I am selling goods, so sold goods to Raju, rupees 1000. So here what is happening? Again, goods is going out and Raju is like his receiver. So Raju account debtor to goods account I have to write. So here what will happen is, here Raju account debtor to goods account. Here also Raju account debtor to goods account. Here there is same. Here goods is a common thing. So now I will not know whether this transaction is of sales or whether this transaction is of purchase returns. So in order to avoid that confusion, what we will write it as? We will write it as purchases. If it is a purchase transaction, I will write it as purchases. Instead of goods, I'll write it as. So now, to avoid that confusion, whether it is a purchase returns or sales transaction, we are going to write it as purchases if it is a purchase transaction. If it is sales transaction, we are going to write it as sales instead of goods. Or if it is a purchase returns transaction, we will write it as purchase returns account. If it is sales returns transaction, we will write it as sales returns account. So instead of goods, here we are never going to write in the books of accounts goods account anywhere in the books. So instead of goods, we'll have only 4 items, that is purchases, purchase returns, sales and sales returns. Based on the particular transaction, we are going to write it as like purchases or sales, whatever it can be. Now, as per the transaction, what is a transaction? Purchase goods for cash. So now instead of goods, we should write it as purchases because this transaction is a purchase transaction. And now coming to the second one, that is purchased goods on credit for rupees 1000 from Khalid retail store. So here now again we have to identify what are the important items. So coming to the items, goods is one important item and this goods is a real account item, and on credit we are purchasing these goods on credit from Khalid retail store. Khalid retail store is a shop, retail store. So this comes under personal account. This is a personal account item. So now coming to the real account item, that is goods. Goods is a real account item. Here when we are purchasing, what is happening? What is the rule of real account? Debit what comes in. Here goods are coming in. So we have to debit. Debit what comes in. We have to debit goods. But instead of goods, what we are going to write? We are going to write it as purchases. So instead of, because this is a purchase transaction, we are going to write it as purchases account. So we are going to debit what? Purchases. And now coming to Khalid retail store is a personal account item. So according to personal account, debit the receiver, credit the giver. Here, Khalid the retail store is giver or receiver. He is giver. So Khalid retail store is giving to us. So we have to credit. So here the amount of worth of goods whatever we have purchased is for 1000, right? So here there is no cash transaction. We'll have two types of transactions all the time. One is cash transaction, the other one is credit transaction. If it is cash transaction, we are going to write it as cash transaction only. We'll write the entry as cash. Here in this transaction, we cannot see the word called cash, or we are buying on credit basis. On credit basis means we have purchased goods worth of 1000 rupees from Khalid retail store on credit basis. That is, we are going to pay that 1000 rupees on some later on day. We haven't paid cash immediately. So that is what is the transaction. So this is a credit transaction. So here in any of the credit transactions, definitely we are going to write the personal account item in the entry, and we will not have the cash word or cash item in the credit transaction. So now let us see how the entries are passed in the journal book. So on 8th April 2020, purchased goods for cash 2000. So as we discussed, goods has to be debited, but instead of goods, what are we going to write? We have to write purchases. So purchases, we have to debit. So purchases account debtor to cash account. Cash is on credit side. So we have to write to credit, and the amount is 2000 rupees in the debit column and 2000 in the credit column. And now coming to the next transaction, that is purchased goods on credit 1000 rupees from Khalid retail store. As we discussed here, goods, instead of goods we should write it as purchases. Again we'll have it as purchases account debtor to Khalid retail store on the credit side. That is, 2 indicates what? 2 indicates the next, this 2 indicates that it is a credit item. Whatever item is written here is a credit item. So Khalid retail store is a credit item here as per the general entry. So purchases account debtor to Khalid retail store account. So narration is being goods purchased on credit. So amount is 1000 rupees. So these are the 2 transactions which we have passed in the journal book. And now coming to the next 2 entries, sold goods to Khan Brothers rupees 12,000. So here on April 14th, what has happened? Sold goods to Khan Brothers rupees 12,000. So what are the important items here? Goods and Khan Brothers are the 2 important items. So coming to goods is a real account item. Khan Brothers is a personal account item, right? So coming to real account, goods comes under real account. So debit what comes in, credit what goes out. Here, are we purchasing goods or selling goods? Are we receiving goods or giving goods? Sold goods, we are selling goods. Means goods are going out. So goods has to be credited. But instead of goods, what are we going to write? We have to write it as sales. We have to write it as sales account. We have to credit sales account. Instead of goods, we should write it as sales account. And coming to personal account, Khan Brothers is a personal account. So as per the personal account rule, debit the receiver, credit the giver. So Khan Brother is a receiver of those goods or giver of those goods. Khan Brother is a receiver of those goods. So debit the receiver. So we have to debit Khan Brothers. So entry in the journal book will be Khan Brothers account debtor to sales account. Rupees 12,000 in debit column and 12,000 in the credit column. And now coming to the next transaction. On April 15th, cash sales rupees 5,000. Cash sales rupees 5,000. Now, we are not going to identify any important items here because here we have only two words, cash sales. Cash sales means what? We have sold some amount of goods for cash rupees 5,000. We should just assume the transaction in this way. If the cash sales transaction is given like this, so we should assume that some amount of goods are sold for cash. That we call it as cash sales. So, cash sales are the two important items now. So, sales means goods. We are selling goods. So, goods are going out. So, that is goods means real account and goods are going out. So, we have to credit sales and cash is a real account again. Cash is coming in. So, we have to debit cash. So, cash account debtor to sales account is the entry in the journal book. So, now let us see the entries, how they have passed in the journal book. So, Khan Brothers account debtor. So, as per our entry, as per our rule of accounts, three rules of accounts, Khan Brothers is a personal account. So, it has debited. So, that is Khan Brothers account debtor to sales account. And narration is being, always remember, every narration has to be written in the brackets and the first word always we have to write it as being and then give the description of the transaction. So being goods sold to Khan Brothers is the narration and 12,000 amount in the debit column, 12,000 amount in the credit column too. And now coming to cash sales. So cash debit, sales credit. So now cash account debtor to sales account and being cash sales is the narration and 5,000 in the debit column and 5,000 in the credit column we have to write. So now let's move on with the next two entries in the journal. So coming to the next entries, that is on April 18th, owner withdrew of worth rupees 2,000 for personal use. So what can we identify as important items here? Of course, owner withdrew of worth rupees 2,000 for personal use. What is he withdrawing? Some amount of cash. That is 2,000 rupees. So here, some amount of cash. So I'll just write it as cash. Cash is a hidden item here. We have to identify those. So personal use, we cannot write it as personal use as an important item here. Because it is not it comes under real account, nominal account and personal account. So we have to identify only three types of items, whether it is a real, nominal or personal account item. So always we should remember that we'll always have two items in the transaction. See, here owner is a personal account item and cash, here though the cash word is not given, we assume it as it is cash because the amount of worth of amount is given as 2,000. So cash is the real account which is hidden in this particular transaction. So As per cash, real account, debit what comes in, credit what goes out. Here, cash is coming into the business or going out of the business. Cash is going out of the business to the owner. Cash is going out of the business to an owner. So, it is going out. That means credit. Cash is going out. And owner is personal account item. So here, as per personal account, debit the receiver, credit the giver. So this owner is receiving this cash worth of 2000. So he is a receiver. So debit personal account item. Here, what is happening is we should not write owner's name in anywhere in the books of accounts. We should never write owner's name in books of account. But instead of owner name, we can write it as something else. So in the very first transaction, instead of owner name, we wrote it as capital because he is getting in the form of capital to the business. So we wrote it as capital. Now, this owner is going to take back his capital. No, he is not taking capital. He has withdrawn some amount of money. So we'll call that as drawings. We'll write it as drawings account. Instead of owner name, if any owner is using any amount of money or furniture or or anything for his personal use, we call that as drawings. So instead of owner, we'll write it as drawings account here. So drawings account has to be debited and cash has to be credited here. And now let's move on with the next entry, that is April 22nd, paid Khalid retail store rupees 500. So what are we paying? So first of all, identify the important item, that is Khalid retail store is one of the important item, which is a personal account item, where this personal account item we have got, and we should get another item too in the transaction, right? But it is not given in the transaction for our visibility. So what are we paying? Paid Khalid retail store. Means what are we paying? We'll pay cash only. So cash is hidden item here again. So cash comes under real account. So cash is going out. So we have to credit cash. And Khalid retail store is a receiver as per the personal account. So we have to debit Khalid retail store. So this is how we have to identify each and every items, whether they are falling under nominal account, personal account and real account, and based on their an item which is falling under these three types of accounts, based on that we are going to apply that rule, and we are going to differentiate what is debit and credit, and then we are going to enter in the journal book. So we can see the first transaction, as I told, drawings account debtor to cash account. So this is how we have to write. Drawings account debtor to cash account, being owner withdraw for personal use. This is the narration, and amount we have to write it in debit column and the credit column. And coming to the next one, paid Khalid retail store. So Khalid retail store is receiver. So we'll write the entry as Khalid retail store account debtor to cash account, and the narration is being paid cash to Khalid retail store. Here we have written paid cash. What are we paying? Cash. So here we have written paid cash to Khalid retail store, rupees 500 in debit column and 500 in credit column. So this is how we are going to write or pass the entries in the journal book by applying these three rules of accounts, that is real account, personal account and nominal account. Once these entries are passed in the journal book, then all those entries are to be posted in the ledger accounts, where let us discuss about the ledger accounts in the next session. Thank you very much.
Like, share and subscribe. Hit the bell icon for more updates.